And I'm back and I'm rolling up my sleeves because we have, a lot of great stuff. We're going to have some fun. We're going to have some fun today. The IRS announced new numbers and I want to make sure that you're aware of 3 tax cuts included in the new IRS numbers. Now, why do I call these tax cuts? Well, if it's an opportunity in 2023 to reduce your taxes that you didn't have in 2022, I'm calling that a tax cut. For me, that's a tax cut, and we want to make sure that we take advantage of all these tax cuts on our journey to build wealth and narrow this wealth gap. So first, number one, the IRS announced that the 401k contribution for maximum contribution for 2023 will rise from $20,500 in 2022 to $22,500 in 2023. Now that is a huge increase of $2,000. Now this can save you in the highest tax brackets, can save you an additional $700 or so in federal income tax in 2023. And you'll also save in state income taxes as well if your state levies state income taxes. Now you might say, $700, that's not a lie. Why are we getting excited? That's $700. What can you do with $700? Right? An additional 529 contribution, pay for part of a vacation, pay down some debt, invest in the stock market. This is $700. We don't leave money on the table. We don't step over $700 over here. So that is one way to save on taxes in 2023 that you did not have in 2022. Now this is for pre-tax contributions. You get a immediate deduction in your federal and state income taxes, right? Federal and state income taxes, but not payroll taxes. So that's Social Security and Medicare. You still have to pay the Social Security and Medicare on those pre-tax 401k contributions. So that leads me to number 2. And one of the only ways you can reduce your Social Security, the income that is subject to Social Security tax, and that is with the HSA, a health savings account. Now I talk about health savings accounts a lot, but the limits on health savings accounts, both for individuals and families, also went up. So just a quick reminder on HSAs, they need to be paired with a high deductible health plan, and you contribute to those on a number on an annual basis, right? And with those contributions, you get a deduction in your federal income subject to federal tax, federal income tax, state income tax, and Social Security and Medicare taxes. That is unlike with 401ks, right? And when the money in the HSA, you can use those funds to pay for qualified medical expenses. Huge benefit, huge, significant, very powerful wealth building tool is an HSA. So if you have an HSA, you can contribute more to your HSA in 2023 than you were able to contribute in 2022. Take advantage of that, and then consider investing those HSA dollars so that they grow over time, not just by your contributions. Like I like to say, let the stock market tends to trend up over time. There's no, past performance is no guarantee of future results, but the stock market does tend to trend up. So let the stock market growth pay your future medical expenses. So make sure you're taking advantage of that. I know right now is right around open enrollment, so make sure you're taking advantage of the HSA if you have it available. And the last one, number 3, the last tax cut I was announced, I think is probably the most impactful, and it helps that you don't have to take action here. It's automatic. The federal income tax bracket cutoffs have increased pretty significantly. So now it takes more income to hit the 22, 24, 32, all the tax brackets. It takes more income to hit those tax brackets. So what that means for you is that more of your income will be taxed at the lower rates, which is what you want. So here's an example. Let's say you're married, filing single with no dependents, right? All your income is W-2. Your gross income is, let's say, $200,000. Just based on these tax bracket changes. Oh, and I forgot to mention, the standard deduction is going up as well. So it's just based off of these tax bracket changes, these increases as a result of inflation largely. Because of these tax bracket changes and the standard deduction, you'll pay about $1,500 with $200,000 gross income. You'll pay about $1,500 less in 2023 than you would have paid in 2022 just based on the tax bracket changes and the increase in the standard deduction if you're taking a standard deduction. All right, $1,500 less in federal income taxes. What can you do with an extra $1,500? Right? Again, this is money you can use to build towards your future. This is money you could use to build towards a child's future. This is money you can use to go on vacation. This is money you can use to pay down debt. These are the three tax cuts that were announced. And I'm calling them tax cuts. Somebody else might not call them tax cuts. I'm calling them tax cuts because they're an ability to reduce your income that you have in 2023 that you didn't have in 2022. Taking advantage of the tax benefits of the tax code, maybe not taking advantage. Taking advantage of the tax code as it's written is a key ingredient to building long-term wealth. And we have to get into this tax code and understand the tax code and how to use it to benefit us if we're ever going to build wealth, if we're going to think about narrowing the wealth gap. We never, ever leave money on the table. All right. That's it for today. You see why I rolled up my sleeves. It's ready to go today. We'll have more wealth building tips going forward. Have a great day.